Alright, so quick question, would you rather have $1 million right now or have lunch with Warren Buffett? Definitely lunch with Warren Buffett because he'll teach me how to get $1 million. Stocks, passive income, big money. Warren Buffett has to be one of the most prolific and successful investors to have existed in our lifetime. And that's because his portfolio from 1964 to 2022 has generated a total return of over 3.7 million%. And a strategy he advocates for often is dollar cost averaging, where you purchase an asset in regular intervals over a period of time regardless of the price. It's a strategy that can be widely adopted regardless of your risk appetite or your experience level. So this year especially, investing has been as risky as going to the casino because nothing is really guaranteed. So here are 5 reasons why DCA is the way to go. Number 1, DCA helps reduce price volatility. So since you're buying at regular intervals regardless of the asset's price, you purchase the asset at varying price points. And if this is done over a long enough period of time, DCA can help mitigate a lot of short-term volatility. And this is particularly beneficial for crypto, given its volatile nature. But what if I want to take a little bit more risk? So for high-risk investors, DCA allows them to better control their risk exposure. By investing just a portion of their capital at regular intervals, you reduce the risk of buying at the top since you're not allocating all of your capital on the same day. So this is key for an asset class like Bitcoin, which can drop 50% from its highs in a matter of weeks, just like it did in January 2018. Number 2, so by DCAing, if that's a term, you take the emotions out of investing. When prices are high, you buy. When prices are low, you cry a little bit and then you buy again. So it removes the temptation to FOMO in and make impulsive decisions based on short-term market fluctuations, and rather build consistency and long-term focus. The fast-paced and sometimes hype-driven nature of cryptocurrency markets can lead to emotional investing for high-risk investors. So by setting aside some capital to DCA, high-risk investors can get a little bit more peace of mind knowing that there's some consistency in their investments, mitigating some of the risks during turbulent market conditions. Number 3, it takes the guesswork out of market timing. So it's not really a secret, no one can really time the market. If you can time the market,
please shoot me a DM, I'll buy your course, I'll give you everything I have.
Dollar cost averaging can be set up as a recurring investment, reducing the need for monitoring and predicting the market movements, saving you a lot of time. For example, people who started dollar cost averaging into Bitcoin at its all-time high price are currently up on their investments, despite the price of Bitcoin being about 60% lower than its all-time high prices. So remember, it's not timing the market, it's time in the market. The odds are the longer you stay DCAing into a good asset, the higher the odds of you making money will be. But of course, you have to make sure you're investing in good, valuable assets. Number 4, flexibility and scalability. So since the strategy is used over a longer time frame, it offers investors the opportunity to scale depending on their goals and financial situations. So investors can start with smaller investment amounts and gradually increase their contributions or adjust the frequency of their investing based on their changing financial circumstances or goals. High-risk investors can also adjust their recurring amounts according to their preferences depending on market conditions. So if there are market dips or attractive investment prospects, investors can increase their contribution amounts temporarily to capitalize on such opportunities. Number 5, ease of automation. So this one is often overlooked. So to start dollar cost averaging, all you need to do is set up your recurring buy and that's about it. So this automation allows you to stay consistent with your investment plans and slowly build up your positions, allowing you to accumulate wealth for the long term. So that's 5 reasons why DCA is the way to go and why it's a good investment strategy to adopt, especially when we're in bear market times.
Now it's time for me to plug a new product that we just launched.
So you now know the benefits of dollar cost averaging, and if you're looking for an easy way to DCA into crypto, we've now released a recurring buy feature on the Bake mobile app. And as part of our launch, we're also giving up to 11% bonuses on top of your DCA amount each time you make a recurring buy on Bake. And that's a pretty sweet deal. So we're going to be linking a video about everything you need to know about how to set up a recurring buy somewhere here. I'm not so sure where. And yeah, that's it for our video. We will see you in the next one. Take care.
Hey, you're not subscribed. Better go do it. And if you're already subscribed, love you. See you next video.